Hello, everyone. This is the Free American Press, their host, Alexander. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. And today we're having Chris Temple on the show. Chris Temple is the editor and publisher of the National Investor. Chris is known for breaking down complex market trends into clear, understandable insights. He's covered the economy, commodities, energy, and global markets for decades, helping investors make smarter decisions with practical and grounded analysis. Hello, Chris. Thank you for coming on the show.
Well, Alex, thanks for inviting me. It's good to be with you, and I'm glad to see somebody, the next generation upcoming that's out there to do what I tell people we're doing, and that is giving people knowledge, not just information. So I'm pleased to be with you.
That's great, and we're very thankful to have you coming on the show to give your knowledge on all these important issues. So, for my first question, how would you describe the current macro environment for the markets today?
Current macro environment right now, basically, if we look at the economy, is like that old Dickens' A Tale of Two Cities. When the president gets up and tells us that we've got the greatest economy in the history of the solar system and all this kind of thing, about a third, more or less, of Americans can relate to that because they've got healthy stock portfolios, they've got good enough incomes, and for them, things are going well. For everybody else, it's like, I don't know what planet you're on, Mr. President, but I'm still having trouble making ends meet. So we've got ever more, and this has gone, and this didn't start with Trump, Alex. It's been going on for decades. It's because of the nature of the financial and monetary system we have and what it leads to. It leads naturally to stratification of wealth, that leads naturally to the markets being the be all and end all. And so if it's the haves and the have-nots, and so we've got a very bifurcated situation. The good news for the time being, at least, is that we still have a fairly liquid economy and markets. The Federal Reserve is seeing to that. In fact, a lot of people, including myself, are arguing, why are they going to lower interest rates again when inflation has risen 0.75% during 2025 from its low back in the early part of the year. But they're going to do that. It's because, long before I was around, there was a guy who is probably one of the all-time deans of newsletter writers. His name was Richard Russell. He authored what were called the Dow Theory letters, and he came up with the term inflate or die. And that's what pretty much all the central banks in the world are doing is they got no other tricks up their sleeves. So, we're really at an inflection point, Alex, for global markets, and it is going to affect the economy. When central banks they can only print so much money before the markets rebel.
Yeah, it's definitely true. So you touched on an important subject, inflate or die. For people who don't know what that is, could you explain that term a little bit?
Well, we have again in our society and in our economy, and I think this is true in most other countries as well. It's because of our political system, and it's because I think investors, not to mention the public at large, have really been dumbed down over the years. Nobody really understands the basics of life, the basics of economics. In politics, it's all left versus right. It's all knee-jerk yell at the other side, even if you don't know what you're yelling about or you couldn't argue your way out of a paper bag. Okay,
Yeah.
well, when it comes to inflation, I'll give you an example. The president in my lifetime with the worst bum rap of any of them was Jimmy Carter.
Right.
Jimmy Carter was elected in 76, came to office in 77. He only served one term. And to this day, even in some of the elite economic and business schools, the textbooks will tell you inflation and malaise and everything was all Jimmy Carter's fault. Technically, it was not because Jimmy Carter came after, well, he had a brief Ford presidency in there after Nixon had to resign. But if you want to figure out who caused the inflation in the 70s, you've got Richard Nixon, who took the U.S. off the gold standard, and then he unleashed Arthur Burns on the world, who was his Fed chairman, and you had a disastrous decline in the value of the dollar. Interest rates ended up going up, and that caused gold and commodities and everything, excuse me, to go into the stratosphere for a while. So, but people don't go back to Nixon because they don't understand monetary things. They don't understand economics. So even this time around, you have Jerome Powell, who with COVID is an excuse at the beginning of 2020, in a period of about 2 or 2.5 years, he created almost 30% in 2.5 years of all of the US dollars ever brought into existence in our 249-year history. Okay. Now, Milton Friedman famously said that inflation is always and everywhere a monetary phenomenon. And it's very simply put, this is not rocket science. When you print more money than there is a need for, the price of things goes up. Not because the things are more valuable, it's because the money is less valuable. And so today we have this dynamic, and where it's starting to come home now is that Paul Volcker, after he was Fed chairman for a while, he figured out ways to actually increase monetary inflation, but have it go into asset prices as a first matter. And so we've replaced in the last 40 years or so, 45 years, the traditional business cycle with a credit cycle. The Fed makes money easy, keeps interest rates down, prints a lot of money, everybody goes nutso, and then you can't go nutso anymore. You've already got a new house, you got a new car, you got doodads and whatever, and everything, gravity reasserts itself, and you have a recession or a deflation. Debts go bad and things like that. That's the cycles that we've had over the years. And so when you have a President Trump, for example, talking about Joe Biden and Bidenflation and so forth, sure, a lot of President Biden's policies exacerbated inflation, but it starts at the doorstep of the Federal Reserve. And until we have a complete overhaul of our monetary system, among other things, so that the American people aren't really borrowing at interest what should be their own credit, we're never going to get out of this mess. And especially now when you look at things going on in other countries, Japan most notably, where they're down the road farther, and now they're having a twin currency and debt crisis. Okay. Inflation and interest rates, Alex, the sum total of what I'm getting at here, are going to stay elevated for quite some time to come, if not get worse. And without changing the system, there's nothing that Donald Trump or Congress or anybody's going to do about it.
Yeah, definitely. So you mentioned that the Federal Reserve created 30% more currency during COVID. So did most of those dollars just go to the very rich, or was this is this like trickle down economics, or where did most of this money go to?
Well, a lot of them might, generally two areas, neither one of which helps the broad economy long term. Number one, a few $1 trillion went in checks and handouts to people to stay home. So you had zero productivity. I mean, you can get away as a country with increasing debts and deficits if somewhere in the process you have some reason to believe that this is going to be accretive for the economy. What I mean by that is if you can borrow money if the return you're going to get from that is going to be more than enough to service the debt and then maybe grow the economy as well. We didn't get that. We just threw the money away, telling people to stay home so we didn't all get the China virus or whatever you want to call this thing. Okay. So that was a complete waste. All it did is add to the debt with no productivity to come along with it. The other thing it did after we had that first initial big drop in the markets is it led to bubbles being reinflated in stocks and a bunch of different things. So again, as I said in one of my first comments, for the people that have got money, that have got stock portfolios that can buy or speculate in real estate, yeah, it's fat city. So that some of that money printing at least managed to go into inflated asset prices. Long term, we need policies that are going to broaden the economy, raise wages, and make it possible for us to at least service debts going forward. Because the broad economy is going to have a lot harder time doing that, let alone the federal government, which has run up such debts that now, we're at an annualized run rate of about $1.25 trillion out of the federal budget just to pay interest on the existing debt, which is nuts.
Yeah, it's definitely really crazy. So we see, like you said, the US is running record deficits. How long can the Fed keep balancing inflation risk with debt sustainability?
Good question. They're already finding out it's not as easy as they think. If you go back to a year ago, this last September, you look at the level of interest rates, long term interest rates, they are roughly the same, if not marginally higher today than they were when the Fed first started cutting short-term interest rates in September of last year. So September of 2024. And
Mhm.
that's after the Fed has cut short-term rates by 1.75%. Well, as of 1.5, I'm sorry. And they're probably going to do it again in a couple of weeks. So that tells you that even though the Fed can control short-term rates to some extent, somebody still has to be willing to buy 10 or 20 or 30-year Treasury securities at interest rates that are going to make things sustainable. And that's becoming a little bit tough because especially when you've got a president now and Donald Trump who on his sleeve wants a cheap dollar, therefore more inflation still going forward in a weaker currency. If you're an investor in the bond market and you've got a choice, you'll say, okay, well, Uncle Sam, I'll buy your debt, but you're going to have to pay me more interest. Okay. And the U.S. has not had to deal with that in a very long time of having more of a buyer's strike. But it's bubbling under the surface. It's happening big time in Japan right now, where
Yeah.
long-term interest rates have just skyrocketed in Japan from where they were in the basement for so many years. Now it's gone dramatically in the other direction. And we're heading in that direction too. So the Fed can lower short-term rates all it wants. But if that by definition means, as it does, that the Fed is going to tolerate higher inflation going forward to keep everything liquid, then okay, sorry, but if you want to sell IOUs for 10 or 20 or 30 years, investors are going to demand higher interest rates to compensate for that. That's how things work.
Yeah, definitely. So it kind of comes to my mind is how long is the U.S. going to be able to service its debt? I think there's going to come a point when they're not going to be able to service it anymore. It's going to get too expensive. So do you think the Fed will just inflate the debt away?
They're already doing that. President Trump has said that's what he wants done. He hasn't made any bones about it, so at least he's honest in that regard. I think you're going to see at some point a renewed effort on a part of the Fed and or the Treasury to find a way to suppress long-term interest rates as well.
Hmm.
Okay. We remember after the markets all crashed in 2008, you had we learned what quantitative easing was. And quantitative easing was when the Fed became the buyer of last resort for bonds and artificially increased the demand for bonds, and that kept interest rates lower. Okay. At one time in the past, the Fed did this thing called Operation Twist, where it sold short-term paper but bought long-term bonds. And of course, if the demand goes up in the market for long-term bonds, the market interest rates come down because bond valuations work inversely to interest rates. It's not like a savings account. Okay. Also remember that it was, right at the tail end of World War II and for several years after, the Treasury actually capped long-term interest rates at a certain level. And that was to keep inflation from getting out of hand, they said at the time. And it was a much different world back then. They can get away with it. And it was also so that returning GIs that were wanting to buy a home, get reestablished, start a business, whatever, had low borrowing costs. So it's not unprecedented that even on where long-term interest rates are concerned that'll happen. And I think there's going to be a political impetus for that between now and next year's midterm elections because sometimes the depth of his knowledge leaves a bit to be desired on such things, especially when it comes to politicking. But when President Trump, for example, says, "Well, the Fed's got to, keep lowering interest rates so that borrowing costs for mortgages come down," you're talking apples and oranges. The federal funds rate is not what sets mortgage rates. Long-term yields in the bond market are what set interest rates. And again, the Fed has cut rates in two steps now, several times the last year's September to December timeframe, and then again this year. And yet mortgage rates are virtually unchanged
Yeah.
from where they were last fall. And if anything, the market's going to get a whiff of the fact that the Fed is really thrown in the towel, let alone if President Trump imminently, as he's going to do, appoints a successor for Chairman Powell, who is going to, follow orders and lower rates a lot. Well, mortgage rates are going to go a hell of a lot higher if they do that, because the market will rebel against that.
Yeah, that makes sense. Yeah, it makes sense that the market would rebel against that.
Yeah.
So, what are the biggest risks you believe investors are underestimating right now?
Well, the biggest risks right now are the fact that we are way late in this credit cycle where you've had, and again, I go back to what Paul Volcker instituted in the early 1980s. We have these credit cycles, things inflate, that helps out the economy because you have the so-called wealth effect from increasing asset prices. It all reaches a saturation level, and then you have a decline for a while. The trouble is that because so much of this is not real economic activity, but it's market speculation, and especially now, Alex, when you look at some of the valuations of the tech companies, the Mag 7 stocks, the artificial intelligence stocks, I mean, it gets more stupid every time we have one of these bubble peaks, the valuations, because there's so much money out there getting thrown at this stuff. So we're overdue to have a decline in these kind of things. And I think people are underestimating that. And I think the markets also generally are underestimating the fact that inflation is not going to come down sustainably. If anything, it's going to go the other direction. Long-term interest rates have already proven they're not going to come down very much. The only things that really are going to change that for a short time would be if we had a collapse in the markets. We had something like a 2008 again. Then, okay, then for a little while, everything crashes. It takes a while to reinflate, and for a little while, maybe our headline inflation numbers would be under 2%. But the worst kept secret in the markets right now, whatever they say to the contrary, is that the Federal Reserve has been well above its 2% target now for what, 4 or 5 years? And the idea that they continue to cling to this notion, oh, we can bring it down. We just out there another year or two. All right, tell us another fantasy, okay? And you're the ones that caused this in the first place. You ever watch the movie Alex, the Blues Brothers?
No.
The Blues Brothers is a great iconic movie, especially for people from the Chicagoland area where Dan Aykroyd and John Belushi, play the Blues Brothers, two great comics. And there's a scene where, and I had my cartoonist do a cartoon of this. I'll have to email this to you later on so you can at
Oh,
least
that
see
would
what
be
I'm talking
great.
about.
Yeah.
But there's a scene in the movie where Carrie Fisher, the actress, plays somebody who John Belushi left at the altar and he took off. And she's been chasing him through the movie. And she's finally got him literally at gunpoint in this culvert. Okay. You left me at the altar. So and so did this and so did that. What do you have to say for yourself? And his answer is, I had a relative come in from out of town. My tux didn't come back from the cleaners. It was locusts, earthquakes. It wasn't my fault. I swear to God, he says. Well, Jerome Powell has given us the same shtick for 5 years.
Yeah.
Inflation, which he created as a first matter, is everybody's fault but his. Oh, broken supply chains during COVID. It's meat packers gouging people. The Putin price hike, as Biden called it, when oil went up. All this other nonsense on the outside of the fundamental fact that the Federal Reserve is the first cause of inflation. So what President Trump is telling you is that he wants it to be even worse going forward if he gets his choice of a Fed chairman in there.
Yeah, I definitely agree. So, do you think we're in an AI bubble right now?
Oh, there's no question about that. I lived through and operated through in this industry the internet and tech stock bubble in the late 1990s. The pattern is the same, where you have a lot of money that gets chasing a hot idea. It all gets kind of narrowly focused on a relative handful of stocks. Okay. And when it blows up, and it takes a lot of victims with it. I mean, in those days, the internet was real. It was just getting launched. It was just getting underway. People getting used to it. There was no question that some of the companies back then that were the early internet stocks, the biggest hardware companies for it, the Cornings, the Ciscos, the Yahoos, the Netscapes at the time. They were the real thing. But there was a lot of stuff out there that was garbage too. And I think that the pattern is the same with the AI stocks. But the trouble this time is that yes, AI, artificial intelligence, it's here to stay. I believe it's hyped. I believe it's overrated in many different ways. But it is something that's going to, speed up and make more efficient a lot of parts of our lives and communication and things like that. But here's a statistic that'll floor you. It floored me when I heard it the other day. At the peak of the dot-com bubble, as it's called in the 1990s, Cisco Systems, their market cap alone represented 4% all by itself of all GDP, our whole economy. Okay. Do you know what its recent high, what Nvidia's share was of GDP if you look at its total market cap?
4%.
16%.
Wow.
That's how stupid this has gotten to be. Okay. Nvidia, no question, is a world-class company. They've got the world-class state-of-the-art processors, et cetera, et cetera. But there is zero legitimate, sustainable justification for the kind of valuations that are there. Not to mention the fact that when you dig underneath the surface, and I'm talking about this in my current newsletter, which I will send to you, um, you look at some of the announcements that have come out. Company A agrees they're going to invest in company B. Company B says, oh, goody, this is a great thing. We're going to invest in company C. Company C says, we're going to invest in company D. Company D goes back, oh, we're going to invest and buy more of company A's product. You've got the circular, dynamic going on that has been in the press a lot, and people that follow this. This has been a raging debate with some commentators and economists and financial journalists like myself. You know, how real are all of these investments? I mean, when you count all of it, and AI is part of it, President Trump told us recently that by year end, he's going to have gotten $21 trillion of investment commitments for the U.S. economy.
Mm.
It's not all this year. It's not, some of it's over 10 years. Some of it's fantasy. Okay. But when markets who are already of this mindset that they got to chase momentum hear this stuff, they just keep buying and buying and buying. And I think the reason you're seeing this from President Trump, I think the reason that you're seeing this from the Fed by increasing the money supply again for quite a while now, from lowering interest rates, even with the market at all-time highs and even with the claims that the economy is still doing halfway decent, is that they don't know anything else to do, and we're so out over our skis with debt, with market valuations and whatnot, that everybody knows behind the scenes that we're not that far from another 2008 happening if a couple of dominoes start to fall or some fat-fingered trader at a big trading desk hits the wrong button and starts a chain reaction. So all that they know how to do is, whether it's real, whether it's fantasy, whether it's total fiction, okay, make all these announcements of all of these gazillions of dollars of investment and this and that, and keep everybody entertained, everybody fully invested and buying even more in the markets, because the alternative means everything cascades downward for a while. They don't want that again.
Yeah, it seems to me like the AI is not a very good sector to get into right now, especially the big ones. So,
Well, by and large, no, that ship's already sailed. If you didn't
yeah.
if you didn't place your bets already, it's a little bit late in the game.
Yeah, I definitely agree with you. So, if those sectors look bad, which sectors look most attractive for the next 12 to 24 months?
I think in very general terms, when it comes to just garden variety stuff, Alex, I think the theme is going to reemerge that still has, and it's tried a couple of times. There's been a few times going back to, 2020 and then 2022, when we had a big decline in the market and people got shook up over the initial onset of the proxy war with Russia. Focus on wants and needs, sell wants and buy needs.
Mhm.
Okay. One of my favorite statistics, even if you think things are going to completely unravel, from the top of the stock market in September of 1929 until the market bottomed in the spring of 1932, the Dow Jones Industrial Average dropped by 89%. That was the big broad market measure. Yet during that same time, one out of three publicly traded companies were higher in price, even in the midst of that epic stock market crash. Why was that? They sold or provided things people needed and couldn't do without: food, clothing, shelter, utilities, whatever the case may be. Gold stocks, a couple of the household names at the time did very well during that time. And stuff that wasn't needed, wasn't bought. And so I would say the same thing today. You look at things, you look at food, utilities, pipelines, things like that. No matter how bad the economy gets, if we have a recession, we're still going to travel. We still need fuel for our homes. We still need to heat and cool our homes. We still need health care. We still need drugs. We still need all these different kind of things. All right. So look at that. That's broad answer number one. Number two, I would focus on sectors that will benefit from the debasement trade that we have now in the dollar as well as in currencies worldwide. Of course, the big winner for a while now has been gold. And I still like gold long term. Several weeks ago, I told people in our audience to start lightening up on some of the areas that we're invested in, even though I still love the story long term. I think that we're going to continue to see some choppiness going forward with gold. So we cut our allocations there. Of all the other commodities and commodity stories going forward, uranium and nuclear energy is at the very top of my list.
Mm.
That's still very actionable. One of the best and safest commodities you can buy right now is uranium at its price. I like natural gas. Oil has got worse bearish sentiment against it than I've seen in a while. It's overdone, but I don't think it's going to change right away. But I still love fossil fuels generally going forward, but natural gas especially. You look at, going back real quick, Alex, to the whole AI thing. Even before everybody went nuts over this theme of artificial intelligence, which demands that much more power, which we don't have. Okay. Some major areas where you've got a lot of data centers and AI factories and things like that, I don't think people realize you've had utility prices go up 20, 30, 40% this year because
Yeah,
there's such a
crazy.
demand for power and it ain't there.
Yeah, so what do you think of California like closing all its nuclear plants and
Well, California's got a brain worm of some kind for a while in the first place. I mean, the power grid stinks. It's antiquated. You're about to close, I think, two refineries, not just one, for
yeah,
gasoline, which is why, among other reasons, California has by far and away the highest gasoline prices of any state, even more than Alaska. It's just stupid. But no, going forward, for all of the needs that we have, data centers, our infrastructure, everything, the two heavy lifters are going to be natural gas number one and nuclear power number two.
yeah,
And you can't go wrong long term with both of those themes. I like a lot of other commodity stories, but what worries me near term is that if between the administration and the Fed, they can't keep all these bubbles inflated. We have a long overdue, at least major correction in the markets. That's going to take the steam out of a lot of stuff. And even things that don't deserve to come down will come down. I mean, you go back, for example, to 2007, for the first time, the gold price hit $1,000 an ounce. Right after the market and everything crashed in 2008, it fell back down below 700 an ounce briefly. Because when you have a major market correction or a collapse, something like that, all traders are trying to do is get liquid. You sell everything you can. Okay. Whether you like it or not, you got to sell. But back then, of course, gold was the first thing to start rallying again, and properly so. And that had happened if today, if we had a similar situation. Um, So otherwise, I like a lot of commodities, copper long term, and of course, there's a lot of stuff that maybe we could talk about another time. But you've got a lot of policy things going on right now that are affecting some of the commodities too. I mean, we have right now an economic and a national security imperative to get ourselves off of foreign dependence when it comes to all manner of materials and so forth from countries like China, Russia, and Indonesia and others. And to his credit, President Trump has made a few steps in the right direction, but it's not nearly enough yet. That's going to be a big story down the road, I think, when we have enough critical mass in Washington that we have the right kind and sufficient industrial policy going forward to rebuild our economy. And as we rebuild our economy, which will probably down the road take the form of another stimulus to get us out of a crash and a recession, what are we going to spend the money on? And unlike during COVID when we just pissed it away with nothing to return, I think next time there's smart enough people around to know that when we have to do something like this again, it's got to be in productive things that lead to high paying jobs to rebuild our mining, engineering, science, all of the things so that we don't have to be looking over our shoulder. We don't have to be importing enriched uranium from Russia. We don't have to be importing rare earth products from China. We can and should be doing these things ourselves.
Yeah, I definitely agree. And it definitely seems like you're right. It seems like countries are all of a sudden wanting to have nuclear power plants, especially in China. But it seemed like for a long time countries were against nuclear power. They were saying, "Oh, it's dangerous." So what do you think caused this big change in their looking?
Well, I think two things. First of all, the belated realization that a lot of the doom and gloom over nuclear power was over very antiquated and one-off accidents in the past. I mean, if you can find somebody still driving, and this was a vehicle that was a fad for a while, a little economy car when I was a teenager, a Chevrolet Vega, okay? If you could find a Chevrolet Vega still on the road, which would be hard pressed to do because they really weren't that good a car, and somebody's still driving it, and it burns oil faster than it burns gasoline, and it's full of holes, and it's rusted, and it's a piece of garbage, does that mean a brand new Chevy Suburban or Tahoe is no good? No, you 50 years later, you got better technology. The thing's built better, it's more efficient, etc. Same is true with nuclear power. Nuclear technology has increased by quantum leaps over the last few decades. So that's number one. Number two, I think a lot of people belatedly are realizing that look, if we want more power in this world, we want data centers and AI centers, we want the 2.5 billion people on this planet that can't even flip a light switch tonight in their home or their hut or whatever. If we want them all to have power, there's two things that are going to do it: natural gas and nuclear, at least on a large scale. Solar and wind and all this kind of stuff, geothermal, that's all nice in certain isolated settings. None of them are reliable 24/7. Ask, you in California, ask even Texas, okay, which their issue is more the power grid than their power mix. So you need all of these things, and the realization is sinking in that of all the ways to increase our 24/7 baseload power, the least bad, if not the best, is nuclear energy, whose only emission is water vapor. It's
Yes.
not CO2, it's not smoke.
Yeah, so how do they dispose of the nuclear waste now?
Well, nuclear waste is disposed of in several different places that are all, overseen by the federal government. There will be other places, of course, added over time, but it can be done very safely because, again, the engineering, the science to do this has come a very, very long way. And don't forget that by volume, when you look at a pellet of nuclear fuel that fires a reactor, you're not talking about a large mass, a large area. So physically, when it comes to mining uranium and having it on hand and disposing of it, it's a fraction of the volume of stuff you're dealing with coal, natural gas, oil, whatever.
Hmm.
So things have come a long way. And I really think to go back even farther, the whole world was traumatized by the two nuclear bombs used in war at the end of World War II. And I had the privilege many years ago of introducing Ambassador Thomas Graham to an investment conference I was running in Chicago. He served several successive administrations, starting with Nixon, when it came to negotiations over nuclear non-proliferation and things like that. He was at the time that he was at our conference, he was serving as a board member for one of the uranium exploration companies I was covering at the time, and that was in attendance at our conference. And Ambassador Graham said, "Look, if Truman had never dropped those two bombs." And you didn't have the whole world just scared of anything to do with the word nuclear, not wanting anything to do with it. Today, 50% of the power in the whole world would be nuclear energy
Yeah.
because it makes so much sense. The technology is improved and it's the cleanest of anything you can do to provide 24/7 baseload power.
Yeah, that's true. Cheap power is definitely something that's going to be needed to drive the worldwide economy.
Yeah.
So getting back to precious metals, where do you see gold heading in 2025 to 2026?
I never set a price, and I'll tell you why. I mean, a lot of people love to set these gaudy prices of I think it's going to be 10,000 or 12,000 or whatever an ounce. I don't know. But what I do know is this, that there's ingredients, and I'm going to be putting out anybody on my mailing list will get this, even my free mailing list, let alone my paid subscribers. I'm going to be putting out an updated take on the gold market imminently. And the way I answer the question, Alex, is I look at all of the factors that lead to a bullish environment for gold. And as long as those factors are still in place, my only answer is I think the long-term trend is still higher. Now, recently, when gold went parabolic from midsummer, and I told people we need to start taking some money off the table because that move was unsustainable, even for gold, and even as compelling as a story is for gold. So sure enough, after we started taking some profits, it went down. We dipped a little below 4,000. As you and I are recording this, I think we're close to 4,200 again. It'll probably chop around for a while. But look, long term, everything is still in place for gold to go higher because the biggest core reason that gold goes up in price is that fiat currencies are being debauched by everybody on the planet.
Yeah.
Everybody's devaluing their currency just to be able to manage debt levels, and nothing is going to change that regime. It's why gold has been on an up, it wasn't always in a straight line. There were long interruptions from here to there. But don't forget the gold price when Richard Nixon severed the dollars linked to gold in 1971 was $35 an ounce.
Yeah, that's true.
And if you go back to that point, there is not a single asset class that percentage wise, even the stock market, has gone up as much as gold has since that pivotal point in history.
Yeah, that's definitely true. I definitely think you're right on gold, and I think that's smart that you don't give a price for gold because it's very easy to be.
That's a marketing gimmick. The problem is some of these clowns out there that give a target price to get a lot of attention. They tell you, "Oh, the Great Reset is coming at the same time." Or there is one guy that's out there, especially, you got to buy gold because otherwise Joe Biden is going to take away your bank account and give you Biden bucks. Or the globalists are going to take the dollar away and you're going to have a new world currency, so you got to buy gold. I mean, so you don't walk away from people like that. Run because they're just sales hucksters. But again, I think a very matter of fact position that I take is if the factors that argue in gold's favor are almost all positive or overwhelmingly positive, long-term trend is still up until that changes.
Yeah. So let's get into some geopolitics. So, how
Okay.
much do geopolitics currently influence your investment outlook?
Well, the biggest thing is that even before this proxy war with Russia, which I hope is finally coming to a conclusion, you've had a you've had a movement for some years now away from globalization and towards a world that is a little bit more insular. Okay, and there's a whole host of reasons for that. A lot of people have forgotten. They blame President Trump for all of this because he's a quote protectionist and wants to use tariffs as a weapon and isolate the U.S. and stuff like that. Before Trump's first term, actually, when you go back to the Obama administration, they were friendly to a United Nations initiative that would add taxes on all global trade and transit based on the amount of miles you covered. Okay, so in other words, the EU is still looking to do this, all right, and tax people within its own borders, which is why the EU is a very sad story of a decaying power. I mean, Europe has been committing slow motion assisted suicide, frankly, for a while. That's a whole different story. But for example, there was this idea floated that, say, for the U.S., if XYZ company in Toledo needs nickel and needs to import it, if you import it from Canada, it's going to cost you this. But if it comes from halfway around the world in Indonesia, it's going to cost you 10% more because you're going to pay an added tax for the carbon emissions and things that are burned and fuel to get that nickel much farther around the world so that that company in Toledo can use it. You follow me?
Yeah.
So that was already underway long before the whole America First and getting off China and everything really became the big deal that it is today. So now that's only added to the impetus that we're seeing a world geopolitically that is starting to fracture a little bit. It's not this post World War II US led one big system of globalization that we had before. There's good things about that, there's bad things about that. It's not going to be clean, it's not going to be neat. I'm not going to live to see how it all plays out in the end. Maybe you won't even live to see how it all plays out in the end. This is going to happen over a period of time. So, in saying that, Alex, you've got to look at what the trends are and what is going to benefit. As, for example, and I'll use this as one example, for all of the ham-fisted ways in which he's handled a lot of things, President Trump's broad vision of eventually having more of a hemispheric power for the U.S., where the U.S. is an anchor of, for example, what Ontario's Premier Doug Ford calls Fortress AmCan. You
Mm.
know, the US and Canada together can provide all of our needs within our two countries. You add Mexico for certain things. We don't need China. We don't need Russia. We don't need anybody else if we do it right and get our own supply chains and products and critical minerals and all those things up and running again. So that is what we're looking at. So in that context, I just did an interview the other day of the president of a company in Alberta,
Oh,
which
wow.
is a company I've followed for a long time. They've done very, very well. And of all of the themes that I really like in commodities right now, not just natural gas, but Canadian natural gas. When you look at and oil and gas both, you have depletions of areas. You've got these big shale plays in the U.S. They've been sticking holes everywhere. Then they go horizontal underground. They employ fracking and so forth. And it's not like we're out of oil anytime soon or natural gas, but we've got a lot of the easy stuff to get in the U.S. Canada is not nearly as far along. And in what's called the Western Canadian Sedimentary Basin, they've got the fourth largest natural gas reserves in the world, 1.1 quadrillion cubic feet of gas reserves, and some of the easiest and cheapest to get in the whole world, which is why the US and Canada both, we've been building our export capabilities to export liquefied natural gas to other parts of the world where it's way more expensive than what we can produce it for here. So I think that's a great theme going forward as the world needs especially more natural gases. US is great, Canada's even better. And again, it's especially as we look to build our own economies, we're going to use lots of it here, but we've got so much of it that we can export it as well. Um, and I think as time goes on too, some of the one-off stories that were pretty hot recently, though we had to take some profits here as well, wisely so. The rare earths, there's been a lot of substances in the news that for a while China was prohibiting exports of, antimony, tungsten, certain rare earth elements, and finished rare earth products and magnets and things like that. So, again, we're not doing nearly as much as we need to be right now, but I think that we've at least turned a corner. And in times to come, one of the investment themes I'm looking at for our folks is what are the best stories out there of the companies that have got the best location, the best permitting pathways, and so forth to replace these things that we're dependent on other countries for.
Yeah, that's definitely true. I think you're right. I think that would be great if the U.S. can get more protected on its own interest with getting what it needs. So I'd like to take the time to share the screen to show everybody Chris's website. So here it is, the National Investor. So you can actually sign up for a free email mailing list to be informed of big market trends that are happening. So I would definitely sign up for that. He has a really good website here with a lot of great articles and different things that he writes about. And would you like to tell the audience a little bit more about your website, Chris?
Yeah, sure. My motto at the top of the page there, that I alluded to when we started is that you can get information anywhere, but here you get knowledge. And I do that in two ways. First of all, I try and give people a reasoned, understandable, big picture view of the world so that we know at least broadly whether to zig or zag, make some reasonably informed judgments as to what assets to be in and what things to avoid. And secondly, beyond that, and we've shared a few examples, Alex, talk about the different kinds of sectors that look especially good. And the way I advise people where those are concerned is sometimes we look at ETFs to take broad exposure. And I also do a lot of bottom-up research on individual companies. So, like for gold, for example, we recently sold all of our ETFs because I didn't like the near-term prognostications for precious metals. I believe we were going to have a correction, and we are. But with only a couple of exceptions, I've told people to hang on to all of the individual companies I follow because I think that they are better than the gold price itself, for instance, just because of their own individual story, and I think that they're outliers and will do better than the overall market.
Yeah, I definitely agree. So definitely please subscribe to his email mailing list. And here he is on X, formerly known as Twitter. I'm following him there on X. So definitely has a lot of great posts on his.
We got to show that hat. That's the president's new hat. You see that right there? Make that great again.
Yep, yep.
We
That's
we just broke the all-time record for the first fiscal month of a new fiscal year in October. The deficit for October was almost 300 billion for the month, higher than any October in history.
Yeah, that's pretty important to know. And definitely follow him on X. And I'd just like to say, Chris, I really enjoyed our time and all the information that you've given to us. I really would like to have you on the show again soon.
My pleasure. I love it. Good
That's
job.
great. Thank you, Chris. And I would like to thank all the viewers for watching. Please subscribe to the channel, leave a like on the video, and share with all your friends. I hope you have a good rest of your day.